Welcome to the latest edition of the ISAS podcast, South Asia Chat. Today we are going to talk about cryptocurrencies. It's a subject of great attention and also controversy surrounding its developments, particularly in India and also the rest of the South Asian region. I am Amitendu Palit, Senior Research Fellow at the Institute of South Asian Studies. And with me today here on the South Asia Chat, we have a very distinguished guest, Mr. Vivan Sharan, who has been regularly commenting on the subject of cryptocurrency and its associated regulations. Vivan is the secretary of the Esya Centre, a think tank in Delhi, and also runs a prominent research consultancy, the Koan Advisory. Vivan, welcome to the episode.
Thank you for having me, Amitendu ji.
Thank you so much, Vivan. We would like to start having your views on a little bit of a background that I'll be happy to share, and I would like to have your perspectives on those. What we see in terms of numbers is that the cryptocurrency market in India has grown by more than 600% last year. And purely in terms of valuation, it is expected to be almost at around $250 million by the end of 2030. So, by all yardsticks, these are very significant numbers that we are going to see. In fact, India right now has the largest number of crypto holders in the world. It's growing quite strongly as far as the per capita crypto users in the country are concerned. So, Vivan, if we could start by having your thoughts on how do you explain this veritably explosive growth of cryptocurrency usage in India?
I think there are at least three reasons. There may be more. As you were sort of giving your introduction, it prompted these thoughts. First, of course, as you said, COVID has accelerated digitization and digital markets across the board. It's not just the case with crypto. But one thing that's integral to crypto is if you try to experiment, Dr. Palit, and I would encourage you to download one of the available applications to trade in crypto assets or cryptocurrencies. You just see the kind of ease of transaction. It's quite mind-boggling for somebody who's been struggling with demat accounts and bank statements and so on and so forth with the traditional banking and financial infrastructure. And this is actually this convenience, in my view, of transacting. Just the fact that you can transfer into, say, an exchange application or an application run by any of the prominent exchanges within a matter of seconds through the retail payments infrastructure, which India has developed over the last 10 years and made quite robust. And you can do a very simple KYC, simple but effective, again online, and within 12 hours or 24 hours you can activate your account and then begin to trade so seamlessly. That digital interface and user interface is really something that appeals to a lot of users, and has broadened the inclusion potential of cryptocurrencies and new financial instruments more generally. I mean, you're seeing this also in traditional finance now with the likes of Zerodha and others who have made brokerage services much more accessible. In the yesteryear, you had to run through all sorts of hoops to be able to access even basic brokerage services and know what's going on, and have be able to requisition any details on your account that you needed, and so on and so forth. So one is digital interface and digital inclusion, and just the seamlessness of it all, which is building on top of the stack of technologies that have been developed and dispersed in the market over the last 10 years, including traditional fintech. The second, of course, is that inclusion has translated into a broad base of consumers from tier 2 and tier 3 cities joining the bandwagon. And it's interesting because I don't think there's a neat overlap between the people who are invested in cryptocurrencies and those who are invested in stock market. So you'll have unique, so to speak, investors who are not invested in any other securities. Maybe they have a little bit of gold, maybe they have property, some land, but there's a high probability that quite a significant chunk of these new investors, so to speak, are not actually invested in Indian stock markets, which bodes well for inclusion because it gives them access to trading ecosystem, familiarizes them with the financial ecosystem more broadly, because as I said, it's a stack of services that you become familiar with, not just the interface of the exchange or the cryptocurrency trading environment itself. And so we have about 15 million Indian investors in the cryptocurrency ecosystem, at least as far as what the reporting, informal and formal, by exchanges has been in the press and behind closed doors. This is about the size of the participation in the market in India, which, Dr. Palit, is interesting because it's also about half right now of the total number of stock market investors in the country. Now, as I said, there's no neat overlap. There may be an overlap between 5 or 10 million of these, but certainly I would hazard a guess that about a third would be completely new participants to any kind of a trading environment or financial ecosystem, in that sense, beyond the basic banking stack that everyone can avail now with the Jan Dhan, Aadhaar, mobile trinity that this government brought in 2014. And the third and final, I think, factor is common again to the larger digital application space, which is the liquidity that has been brought into India through venture capital, private equity, and so on, and then been invested into some of the projects around cryptocurrency that have scaled, particularly in the exchange space. So we have about at least $2 billion plus valuation exchanges in the country now that also receive investments from large global exchanges, as well as, of course, as I said, venture capital and so on. And you have a $1 billion valuation plus cryptocurrency itself, which is called Matic, which is run by a company called Polygon, which shot to prominence again in the COVID era. So this has also brought eyeballs to the entire industry. It has given them the ability to compete and scale and manage this complex ecosystem and the volumes that it entails.
Thank you, Vivan. That was very illuminating. And I think from what you explained, the convenience, the inclusive character, and the fact that there's to a very large extent a great amount of faith which is being displayed by young, upcoming, adventurous asset consuming class and investing class, particularly from India and also elsewhere in the world. This is clearly something that needs to be noted as prominently as possible. And what I also am pretty intrigued about is that the cryptocurrencies today, and not just in India but elsewhere in the world, are dominated by private players, private miners, and developers of these currencies. And for India, the NASCOM is of the opinion that cryptocurrencies can have a positive impact, emerging as the fastest growing technology subsector. It's expected to play a transformative role in a number of strategically significant areas like healthcare, safety, trade, and finance. And if that is indeed so, then the entire perspective connected with cryptocurrencies goes well beyond the role they are envisaged to play just as currencies. So I'd love to have your thoughts in this regard.
Yeah, so there are a couple of things that we need to unbundle here. It's a large, complex question. Um, First is that there is an intrinsic link between several of the so-called cryptocurrencies, and I'm saying so-called because I think one of the uh, key drawbacks of terming it a cryptocurrency has been this direct head-on fight that the crypto ecosystem has had with central banks. And several countries that are now legislating or regulating around the crypto ecosystem are doing so by actually terming these to be crypto assets. Asset as a superset of various other classes of, say, securities, commodities, etc., and not as currencies. And I think that does away with some of the kind of central banking concerns, not all of them, but at the outset, that's important to note. The second is that the development of the blockchain ecosystem, which holds tremendous potential, and that NASCOM uh, seems to be evangelizing, and so many others are. And there are many governments, including ours, that has stated in the past that we don't intend to kill innovation. We want to promote blockchain ecosystem. Several ministries have come up with blockchain strategies, latest of which being the IT ministry just I think last week released some new blockchain strategy, which I'm still to peruse. But the point is, as a corollary, many experts or government officials seem to suggest that blockchain can exist without cryptocurrency, and there's no intrinsic link between the two, and therefore one can take a differential approach to both subjects. And that's another myth that I think needs a little bit of busting, because there are several cryptocurrencies, so to speak, that basically incentivize developers to come and develop new applications on top of the blockchain architecture that they run on. And Ethereum is the most, I guess, the widest used and most popular of such blockchain ecosystems, where you can, when as a developer you start to develop a new use case for Ethereum, atop of the Ethereum blockchain ecosystem, you get rewarded for the work that you do using Ether, which is also now a tradable asset, and you can sort of buy and sell it in India, and so on and so forth. So there's a close link between incentives, or rather, incentives is the bridge between cryptocurrencies and blockchain. Without cryptocurrencies, you don't have incentives in the blockchain ecosystem that you need for open innovation to flourish as it is today. While there are many skeptics, or there are lots of skepticism around what are the eventual use cases at scale for blockchain as well, I think the point is that you can't discover those use cases unless you actually incentivize the private players to really drive this ecosystem and be incentivized through the use of crypto assets or cryptocurrencies, or the allowances to the trading thereof. So that's also, I think, an important thing to unbundle right at the outset for your listeners. And finally, you touched on the important factor of the youth, and I think I missed that in the first set of drivers that we were describing. You're right, absolutely, that there are large number of people, young people, and these young now, the the parameter for what is young, I think, may have changed since you were young, sir. But perhaps I will count up till 40 or 45-year-old people as part of this young populace in India, which is productive, working, earning an income, has disposable income, and so on. The uh, they have really across the world there seems to be some sort of a kindred spirit among these, in terms of looking at the future and what it holds. And I think a lot of how this asset pricing is happening is on the basis of that expectation of the future. And this would have been true of any kind of asset, whether it is gold or silver, at a point in time when people decided to ascribe a certain qualitative and quantitative metric to valuation of that asset. And I think that's the same thing that is happening, playing out in this ecosystem. And it's a very long term play, in a sense, because you're betting that in 10 years or in 20 years, this decentralized ecosystem, which is symbolized most prominently by cryptocurrencies, is going to take over the world wide web and represent the web 3.0, as they say, which is a decentralized version of the internet, which much greater control much greater transparency and proof of provenance and so on and so forth, which of course has many use cases. Trust as a use case, and you can extrapolate from there into infinite numbers of use cases.
Vivan, that's again, something which makes us ponder about the status of regulations surrounding cryptocurrencies. And here I wanted to come specifically to the Indian context. And there's a lot of talk that's taking place around how to regulate cryptocurrencies, and we look at the broad perspective of digital currencies in India as it is being unregulated till now. And there is a proposal that the Reserve Bank of India will introduce a digital rupee. And at the same time, there will be a set of regulations that will be proposed for controlling the private cryptocurrencies. So this is perhaps going in a direction where the prospects for private cryptocurrencies might not be very encouraging. What's your view in this regard?
Uh, to sum up my thoughts and then I'll unpack them, I think that CBDCs, or central bank digital currencies, which do represent the future of central of money, in a sense of digital money issued by central banks, and private cryptocurrencies or cryptocurrencies more generally, will indeed continue to coexist in the future, as the CBDC and cryptocurrency use cases, even as they are built out. And there are several reasons for this, and I think they must coexist and they should coexist, and I think they will inexorably coexist. So I'm quite confident that as countries begin to experiment with the use of CBDC. So, firstly, just again for the sake of your listeners, CBDCs is not the same as cryptocurrencies. CBDC is digital money. It's essentially doing away with the current ledger system that central banks have, where they need to involve intermediaries to be able to do their accounting. Instead, you have money in bits and bytes, and the settlement happens in real time without intermediaries that are used to settle the exchange of money. And that's basically CBDC. So CBDC is bank money digitized. There are multiple forms of CBDC, and we don't need to get into that, but broadly, there is a wholesale CBDC and a retail CBDC. The wholesale CBDC can be used to settle between banks, for instance, transactions, and between the central bank. And a retail CBDC would have a much wider use case where any consumer can use it and buy goods and services in exchange for it. Now, one of those goods and services or assets that consumers could buy in a retail CBDC environment would indeed be cryptocurrencies. And that then links back to the regulatory question that you asked, that a number of governments are looking at the public interest concerns, including security, most prominently, perhaps, which links back to the old days of cryptocurrency discourse, where it was largely used, or supposedly largely used, to access illegal goods, such as drugs, on websites like Silk Route. And that was the origins, in some sense, of the retail transactions of around cryptocurrency, which now are a negligible proportion of cryptocurrency transactions. In fact, less than, I think, 0.5% of them are supposed to be now for any illegal illicit activity, which I think would perhaps um, mm, bode well for the comparison with cash. But in any case, coming back to this proposition around security, if I was to transact and buy all my cryptocurrencies using central bank digital currency, it just bodes well. It engenders a greater level of transparency to my transaction portfolio, and therefore allows regulators to track, monitor, analyze transactions more closely in the cryptocurrency ecosystem. So I think it's very important for the two to coexist in that sense. And in another, which is that um, which is something that we've written about recently, which is that some of the countries that are at advanced stages of CBDC deployment, including China, may obviously want to to internationalize their digital money as soon as possible, and some of them may have a much greater, or much be maybe much more accelerated in their efforts to do so. Now, unless we want a new form of digital dollarization to happen, which basically means that instead of the dollar, you have a Chinese yuan or Chinese CBDC in circulation in Asian countries. Um, unless we want that kind of concentration risk to happen around a new digital currency, I think and given the fact that countries like China have actually banned the use of private cryptocurrencies or cryptocurrencies more generally, countries like India, which are looking at regulating this ecosystem, must also keep that larger strategic context in mind, that uh, competition between CBDCs and cryptocurrencies around the world bodes well for uh, competition between currencies more generally, between CBDCs more generally, as well as between CBDCs and cryptocurrencies, which is a better environment for a country like India, middle power, than is an environment where you basically have CBDCs competing with each other and no alternative currencies in the mix or assets that are used that can be exchanged. So it's a mix of strategic considerations as well as the entire security consideration, transparency, etc., which leads me to believe that CBDCs and cryptocurrencies must coexist as far as India's calculus is concerned.
Vivan, the interesting point that you raise over here is the question of coexistence, and I'm quite sure that coexistence is an issue which, if handled properly and dealt with carefully, can happen. It's clearly not something which is beyond the scope of effective and efficient regulation. But unfortunately, what appears to be driving the larger part of the conversations around the regulation is the fact that cryptocurrencies by themselves, at least for a country like India, are not particularly good for a variety of reasons, and we need not go into the details of those. You touched upon a few of those peripherally in your responses. So there seems to be, from the reports at least that are coming out into the papers, that there's going to be a move, there's a greater policy consensus on prohibiting private cryptocurrencies and allowing the CBDC of the RBI to float. But over here, there's also another point that is coming up, that it seems that the authorities do recognize the fact that the cryptocurrencies are here to stay. They are the instruments of the future, and it is literally quite impossible to just banish them from the space of financial transaction and intermediation. And with that in mind, there is a view that while their currency functions might actually be limited or controlled or not allowed, they might be allowed to be used as investment assets. Do you agree with this view? You think, is this a line worth pursuing?
I think it's a interim solution until we build supervisory capacity around the cryptocurrency ecosystem. One can't argue with this because the if we were to impose a complete prohibition, which is unlikely to happen now, we may wake up 5 years from now and find ourselves in a world where the world has moved on. Cryptocurrencies and CBDCs, continue to exist in the global financial ecosystem. The financialization around this and sort of the future of finance is also closely connected to these developments, and we'll find ourselves excluded from it and find it extremely hard to re-enter this environment and build supervisory capacity from scratch uh, when if this ecosystem becomes ubiquitous and indeed a part of our future. So I think from that standpoint, India has taken a cautious, calibrated approach, which one can't argue with, because after all, the kind of fiduciary responsibilities and the sort of financial literacy issues in the country, wherein we have, again, the low levels of participation in the stock market is indicative of this, right? You have only 30 million, like I said, invested in the stock market, of which, Dr. Palit, I think perhaps 50% are from Gujarat and Maharashtra alone. So the rest of the country is really not part of this, of the financial services economy, in a sense, aside from now using digital payments quite widely. So there is a sense where these investors need protection, and therefore, to allow, and also on the financial stability front, the RBI is not very confident of what will happen when, if there is a run on, say, bank deposits as a result of the proliferation of cryptocurrencies, something that even the Bank of England, with such an advanced economic underpinning, is wary of. But the answer to that is not to say that because there is a potentially a financial stability risk, particularly linked to a few of the cryptocurrencies that may be neater substitutes for currency, um, there is a logic to banning, because then you lose the ability to build supervision capacity altogether, which is a horrible situation to be in, if 5 years from now the world changes as it seems to be. And the associated element to this regulatory outlook is that, as I mentioned at the outset, we have a few large exchanges now operating in India, which means that you have a large intermediary to make responsible for various regulatory mandates that can protect investors, which includes better KYC. It includes reporting on under existing money laundering provisions. It includes the kind of self reporting and governance that, say, the SEBI mandates under its existing set of statutes, and so on and so forth. So it is, the exchanges make for a compelling case for a regulated ecosystem to be allowed to prosper, even as India looks at global trends, builds international consensus. Because remember, even that international conversation is going to be very important. I mean, we are not going to be able to do things in isolation. This is also something that the Prime Minister has recognized in speeches that he's made recently. We have also, we sort of are part of processes within the G20 and the FATF, Action Task Force, around money laundering and terror financing and so on. There are lots of issues there. There are issues around interoperability that we're looking at internationally. So we have to be an active part of these conversations and not be underrepresented in them, as has traditionally been the case in technology conversations. We have a lever in financial in the this frontier market, in a sense, in this frontier technology, in that we have had a Cambrian explosion of innovation in India around this technology. There are hundreds of firms, and every IIT and every engineering campus will have at least a bunch of boys and girls who are experimenting with blockchain and its associated use cases, and are incentivized by the use of crypto assets and trading in crypto assets and cryptocurrency. So there's, I mean, one lesson, Dr. Palit, I think that you would agree, as an economist who's been looking at um, this country, is that wherever there is momentum, I think the role of the state should be to regulate that momentum, but not to put a sudden stop to it, because that really then erodes economic value. You basically are devaluing everyone's time who's participating in this ecosystem, even as you put in place the guardrails for investors and consumers to not be expropriated, to work through legal, regulated reporting exchanges that are registered with authorities, and enable you to really surveil and supervise this environment effectively. And if you don't do any of this, then I think in 5 years time, like I said, it'll be the world would have moved on. Right now, just to sort of put a just to round this off, in the world also of digital finance, it's important to note there's a three-way contest ongoing. There is the traditional fintech companies that are trying now to create greater monetization and commercialization prospects for themselves by adding values, by stacking value added services to the mix, and making money. which could include insurance, and now even this whole conversation around digital banking is basically fintech companies wanting to figure out yeah, ways to monetize their base. Then you have big tech companies that have used network effects and are now well positioned to acquire new customers in offering them financial services, because they have low customer acquisition costs. They already have such a large base. And the third part of this triad is this whole decentralized finance, and what it portends. Even if you don't have use cases at scale in India today, you can't discount the possibility that that third part of the triad will also lead to new forms of competition, disintermediation, and in fact may even address some of the competition and concentration issues and risks that you see in the other two ecosystems. So I think there's that whole competitive free market logic to also allowing the digital financial ecosystem to really mature in India through this three-way fight, while we supervise and regulate it to the best of our abilities.
Vivan, I think that was really a very long term, deep, and well thought out perspective that you provided on the subject. And yes, I do agree with you that for the Indian economy, it's extremely important to capture, nurture, and keep going the great amount of innovation and talent which is actually moving into the cryptocurrency space. Regulations are essential, but regulations should be for enabling and encouraging. They are not supposed to throttle the momentum that has been built up, because that would only be amounting to adding regulatory cholesterol to a healthy sort of capacity. So, with that, Vivan, thank you so much. We have come to the end of an extremely enlightening and productive conversation on cryptocurrencies in India. Thank you so much for joining us, sparing your time, and enlightening us with your valuable thoughts and suggestions.
Thank you. It was a pleasure.
You're welcome, Vivan. Ladies and gentlemen, that was Vivan Saran on the subject of cryptocurrencies in India. I hope you enjoyed this episode of the ISAS series of podcasts, South Asia Chart, and we now welcome you to join us for our future series of the episodes on this as well. Take care and have a good day. Thank you.